Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at what's been going on most recently with the price action and what we think might actually happen next. As I get into this video, if you find it useful and informative, hit the like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there. Okay guys, let's make a start with this one. Bitcoin paired up with USDT on the hourly chart, and Binance is our data source. And yeah, let's actually just kind of zoom out here because we still do have a couple of possibilities. As you can kind of see here, the one that I think is the most likely play is this kind of ABC structure to the upside. This ABC structure is called a zigzag, and it basically consists of 5 waves going up, 3 waves coming down, and what we should have is a 5-wave structure going up. Okay, if you start with 5, you end in 5. Okay, so this is the kind of the one that I think is the most probable right now, and this will take us up towards the $27,000-$28,000 range. Now, there is, of course, the possibility that we have actually completed the high up here. Okay, and this would be under the assumption that we've done a running flat correction, which essentially would be an A, B, C structure, an irregular flat. And the irregular flat looks like something that would commonly be known as a megaphone pattern. This is basically where it expands out from a narrow area like this. It kind of goes like that. However, I think this one is, although possible, yet to be proven as true and so forth. And I do think that we have the higher probability of moving to the upside because our oscillator down here is oversold on the hourly, on the daily chart, which I think gives us that kind of potential to see this kind of growth potential to the upside. Either way, if I zoom out even further, all of this is all corrective in a very similar way that it was corrective during June. So I don't think that there's anything major going on here. We had the DXY dropping, which meant cryptocurrency assets pumped to the upside. A little bit of FOMO then coupled in really pushed things up, but volumes are low in comparison to where bull run standards would be, and yeah, we aren't really seeing the same level of participation that you'd expect to see either from different kind of sized demographics. That being said, the move to the upside here is kind of where I think things are likely to go, at least on the short term, with a bigger macro view of bigger corrective structures. Now, we can't be 100% confident that we're going to be moving up. It's just the one that I think is the most probable. And we do have a couple of areas that will confirm or deny this. So the first thing is that if we were to come down lower than the origin levels of our wave 1 at the bottom here at $21,351, then, you know, we're breaking down. There is no zigzag pattern. And if we start to see this emerge as a 5-wave structure and move to the upside, then, you know, we can be confident in thinking that it is a zigzag. Now, the issue that we have here is that neither can be proven to be true yet, as in the irregular flat or the zigzag pattern. Now, if I come down into this most recent price action, again, it doesn't look overly great. And so let me explain and show you. So it looks like we would potentially be able to kind of go, hey, look, 1, 2, 3, 4, 5, right? Only problem is we can't do that. And we can't do that because it hasn't met any of the requirements of a 5-wave structure. And inside here, all we really have is a 3-wave structure, even though it kind of looks like a WXYXZ, WXYX and Z. It doesn't even meet those requirements really either. So for the most part, it's actually more just of the 3-wave structure right in here. And I think it's probably going to be something that has to get measured like this. Just a brief kind of movement to the upside. Now, on the micro scale here, we could argue that actually we can go up then down. This is going to be one of those things where I get ridiculed in the comment section for saying it. We're going to go up, then we're going to go down. But essentially, to me, it looks like we're going to have to move up towards 23,679 approximately, only to really come back down later, because I do think we have the ability to kind of look at it like this, with this move to the upside here. If I can get that on there, approximately that level, showing us 22,896. This would look like this. So we can kind of see that we have these kind of corrective structures being strung next to each other or nested inside each other. All of which, once that is done, I would say that we probably have the potential to then take a look at it from this point of view, move this over to our low over this side, and then take a look at a nested position like this, taking us slightly higher into those ranges again, 24,000. That would get us back up into this yellow box range, but of course, all of that is corrective right in there, and that particular move would completely cause havoc with our oscillator of the stochastic RSI and potentially see us resetting everything, meaning that it would be then possible to look at this entire structure as some kind of giant A, B, and C to the downside, really potentially then testing those lows and testing the ability to think of this as an ABC structure to the upside, a zigzag structure to the upside, $28,000. Okay, so you can kind of see here how this market is incredibly fragile. And it's fragile in both directions. It could have a small move to the upside. It could have a small move to the downside. And it's a very inconclusive. It's a very difficult read. I still think the most probable scenario is a move to the upside. However, I don't think it would take a lot of negativity to really also shake the market to the downside. So we want to be really, really cautious here. For the most part, if I were to zoom in, I think the most probable play here is that we actually have a small move to the upside where we come up towards our key levels here of around $23,679 approximately, right? I'm just going to draw kind of a line just in there, approximately this kind of level. And then once we do that, I think we have a highly probable move to the downside at 22,890 approximately, before we even have the ability to think about a move to the upside where we can then think about the $24,000. Okay, so there's a three-step phase here, right? And markets don't move in straight lines, and we should expect to go up, to then go down, to then go up again, right? And you can kind of see that lots of people are going to get absolutely wrecked on this because they are either going to go long with the current stop loss down here, right, on this swing low, and then get wrecked as that move to the downside comes down, but doesn't take out this existing low down here at 22,700 and then rallies back up, basically liquidating out any of those short positions who were then thinking that the prices were going to go down, and we're using the 23,800 level as their stop loss. So you can kind of see how the market is kind of manipulated in a roundabout way. It's not manipulated in the sense that people are deliberately forcing the price in these directions. I mean, you have a little bit of that with whale participants and market makers, but essentially really what's going on here is a liquidity hunting. And what you see is basically the liquidity being hunted for and captured. And that comes in many different forms, whether that is spot orders or whether that is, leverage players being liquidated. There's quite a few different kind of forms of liquidity, but essentially liquidity nonetheless. Where is the money? Where is it sitting? And how easy is it for you to trade Bitcoin for fiat or for fiat for Bitcoin, for example? Or in this particular case, USDT. How liquid is USDT to Bitcoin pair, and where is the liquidity sitting? And how easy is it to take advantage of that? Now, from a smart money concepts point of view, does this align to our thinking? And well, straight down here, we can see that we had the imbalance in the order books up here, okay, and our current price down here. Now, if I go ahead and run our fib levels back on here, and we were to kind of move this up here, thinking that our next move was to the upside, what happens to be the 1-to-1 ratio? Well, the 1-to-1 ratio, as you can kind of see right here, is on top of this imbalance. So $23,679 would essentially take out this imbalance in the order book, this imbalance, this fair value gap. Okay, so I think it's important that we understand that even from a Elliott wave theory and smart money concepts, these two things are saying we have this probability of a move to the upside. Of course, this area also happens to be in an order block for sellers. Okay, so we can see that there's a block of sellers here. So again, that then lines up to thinking that we have this kind of structured move where we have to come down potentially into, of course, the block of buyers, which will happen to be down here, which will then allow us to think about this entire move to the upside, which would be something to this effect. And that would take us right back up into the slightly higher range of sellers, yes, but also equilibrium. Equilibrium is essentially the distance between our premium area and our discounted area. So right now, this is kind of the most obvious play, getting rejected from here would then allow us to think about this entire structure, as I said before, to do something to this effect. Okay, now it's possible to do this. Although really what I'm hoping for is an emergence of a 5-wave structure, which we do not have. Now, it could, of course, turn out to be some kind of diagonal. That's also valid within the zigzag pattern, but very rare and unusual. You wouldn't normally expect to see it, but it's definitely something that you could be seeing. And we do have this imbalance in the order books also up here, slightly higher in the price charts at 24,800. So yeah, it'd be one of those. We could potentially see that move and grab that and enter into the premium area. Now, this is a strong high, which means it's unlikely to get broken, and we have a weak low at the moment, so it'd be interesting to kind of see how those two things do play out. But essentially, that Elliott wave theory structure is mapping quite nicely here to our smart money concepts, and we can see all those key areas from the Fibonacci retracement levels mapping really nicely into where the imbalances are, where the internal order blocks are, and where the discounted and equilibrium areas are. So essentially here, it looks to me like Elliott wave theory and smart money concepts are coming together to say a very common story, and that is that we should be thinking up, then down, then up again as a series of events to unfold for BTC. I'm going to leave the video right there though, guys. If you found it useful and informative, hit the like button. I do appreciate that. If you're new to the channel, subscribe, tap the bell, select all the notifications, and in doing so, you will stay up to date with everything that we do here at Cheeky Crypto. If you're looking for more information on Elliott wave theory or on smart money concepts, then why not check out the 𝗕𝗘𝗪𝗀.com, linked in the description down below. Until the next one though, guys, have a fantastic day.